I'm Rochelle. I'm the co-owner and director at Brown Hamilton Partners Accountants. I'm going to give you a brief explainer today regarding franking credits. We get lots of questions from clients regarding franking credits. Let me show you. From Brian, why am I still paying tax if I received franking credits? From Shane, you put a franked dividend in my personal return, but my company's already paid tax. And a similar one from Melanie, aren't I being double taxed when you gross up my dividend in my tax return? And last one from Justine, I can see I got franked dividends, but who the heck is frank? Okay, let's go to the whiteboard to help explain a little bit more about franking credits. Here is a company called Profits Proprietary Limited. Say this company pays tax at 30%. So if it made $100 of profit, it will pay $30 in company tax, sent off to the ATO. Now, Profits Proprietary Limited has $70 to distribute to its shareholders as a dividend. Now, here is Mr. Shareholder. Let's make his name Frank, just for comedic input. He receives $70 in cash. That makes Frank happy. Attached to that $70 is a tax credit of $30, known as a franking credit, which is the tax that Profits Proprietary Limited has already paid to the ATO. Now, when Frank has his tax return done, he will be taxed on the grossed up dividend, which is the cash he received, $70, plus the franking credit, $30, which equals $100, the profit that Profits Proprietary Limited made. Frank's marginal tax rate happens to be 40%, so he has to pay $40 on that dividend. Urgent email just received from Melanie. See, Frank is being double taxed. I told you so. Hang on, Melanie. Let's get to the end of the explanation. Back to the whiteboard. So Frank pays $40 and then he offsets his franking credit of $30, which leaves $10 of top-up tax to pay. Overall, the ATO received $40 in tax on the profits, which is Frank's tax rate. $30 from Profits Proprietary Limited and $10 from Frank. Now, Frank's wife, Frankelina, she has no other income, so her marginal tax rate is $0. She receives a dividend from Even More Profits Proprietary Limited of $1,000. This company paid $300 in tax to the ATO. Frankelina receives $700 cash in dividend with a franking credit of $300. As Frankelina will be taxed 0% on her dividend income of $700 plus franking credit of $300. So Frankelina has nil tax to pay, but she gets a refund of the $300 franking credit. So ultimately the profits of Even More Profits Proprietary Limited has nil tax paid on it. So Frankelina has $300 in her pocket and she's super happy. She might go and spend it on a new pair of shoes, or she might go and invest it in some more shares. Up to her. That's our brief explainer about franking credits. I hope that's answered some of your questions, and we're happy to help if you need further assistance.